It's day 2 of the government's shutdown in the week which is meant to see the release of NFP figures, a pivotal factor in the future of the US economy. The knee-jerk reaction to the standoff was bearish for the dollar, but what will the after effects be? Joining me down the line to share his forecasts is Unicredit's global head of FX. Vasileios, the US dollar edged down against the Swiss franc on Tuesday, hovering near 19-month lows, as the greenback weakened broadly after the US government began this partial shutdown. As the SNB maintains their cap, what is your short, mid and long-term forecast for the dollar Swissy?
Right. In the short term, with the US government shutdown and the upcoming US debt ceiling negotiations, I expect the pair to remain volatile and hover around the 0.9 level. In the medium term, however, as the fiscal situation gets resolved, which is our central scenario, I expect dollar Swiss to grind higher, mainly on the back of better global growth prospects and a propensity by market participants to take more risk. We think dollar Swiss will be at about 0.96 by the end of this year and close to parity 1 year from now.
The ECB left rates unchanged at 0.5%. The move or lack thereof was in line with market expectations. Any fireworks would spark from the subsequent press conference, causing the euro to remain under pressure. Similarly, Draghi emphasised the bank's forward guidance in order to talk down the recent higher levels of the single currency. With that in mind, how do you see the euro performing against the dollar?
Right. In the short term, I think the euro looks a bit toppish and somewhat stretched and would expect a retracement towards the 133 area. In the medium to long term, however, we think that the euro will remain supported because, one, the improved growth picture in the eurozone, and two, the increasing current account surplus. We have euro-dollar at 135 by year-end and 137 1 year from now.
The Japanese yen is seeing mixed trading due to the impacts of the release of a plethora of Japanese economic data. And as the US shutdown ensues, Shinzo Abe went ahead with the third arrow of his Abenomics and the first tax hike since 1997. But how will this all affect the yen moving forward, and what will the main drivers be thereafter?
Well, I think, like the Swiss franc, the yen is likely to remain volatile in the short term due to the uncertainty over the U.S. fiscal situation. But I think in the medium term, the yen price action will be dominated by the global growth picture and Japan's monetary policy, largely. With growth improving globally, risk appetite rising, and the possibility of additional monetary stimulus by the Bank of Japan, we think that dollar yen will rise higher. We have dollar yen at 107 by the end of this year, at 114 1 year from now.
Vasileios, thank you so much for your perspectives. Viewers, complementing this Targets in Focus is today's press review on the debt ceiling with my colleague Elaine Stenson, so please do click back to Dukascopy TV for that. Goodbye for now.